Welcome to the Deep Dive. This is where we take a whole stack of sources, cut through the noise, and really pull out the key insights for you. Today, we're going deep on how things like job numbers, new laws, even tech trends are all kind of connected. You'll see how they impact everything from the economy to maybe even the price of your 4th of July fireworks.
Yeah.
It's all about adaptation and, well, disruption.
Exactly. Our goal here is to give you that shortcut to being genuinely informed. We'll break down the big shifts in the economy, in tech, in policy, and really show you what it means for, your wallet, your day-to-day life, and what might be coming next. Hopefully you'll have a few aha moments as we connect some dots today.
Okay, let's get into it. First up, the macro picture. Now, we had to start with the June jobs report. Now, the headline numbers, they looked okay, right? Non-farm payrolls up 147,000.
Yeah, better than the 110,000 expected. And the unemployment rate dipped too, down to 4.1%. Lowest it's been since February. So on the surface, pretty solid.
Sounds good. But that's not the whole story, is it? Where did those jobs actually come from?
Right, that's the catch. About half of them, 73,000, were state and local government jobs. Think, education roles, mostly. Meanwhile, the federal government actually cut 7,000 jobs. So the private sector only added 74,000 jobs.
74,000. Okay, so that's the smallest private sector increase in, what, 8 months?
Exactly. So it wasn't really this broad private engine firing on all cylinders. It was more, public sector hiring pulling the weight.
And what about people actually in the workforce, the participation rate?
Yeah, that fell too, down to 62.3%. That's the lowest since late 2022. So fewer people are working or even looking for work relative to the working age population.
And wages.
Wages ticked up a little, 0.2% for the month, 3.7% over the year. So some growth, but maybe not enough to really accelerate things dramatically.
So what does all this, nuance mean for the Fed, for interest rates?
Well, it probably takes a July rate cut completely off the table. The market seems to think so anyway. The odds dropped to 4.7%.
Wow, that low.
Yeah. And expectations for the whole year have shifted. People were thinking maybe 3 cuts. Now it's looking more like just 2. This kind of report, strong headline, but weaker underneath, it just doesn't give the Fed a strong reason to ease up yet. It sort of complicates their picture.
Okay. So the Fed's likely holding steady. But what about overall market confidence? There's still this talk of American exceptionalism, right? Even with all the concerns floating around.
Yeah, it's interesting. You've got worries about tariffs, government debt, the dollar maybe weakening. But some strategists are still saying, look, the underlying strengths of the U.S. economy and financial system are intact. They argue it's still one of the most attractive places to invest globally.
And the market seems to reflect some of that optimism. S&P hitting new highs recently.
It did, spiked 25% from the low point back in April. One analyst called it extraordinarily bullish, even with all these cross-currents, these conflicting signals in the economy.
Right. But you have to wonder, what are the potential blind spots? What risks might that exceptionalism narrative be downplaying? And while we're talking markets, let's look at some specific company moves. Datadog, the cloud monitoring firm. Big jump for them.
Over 9%, yeah. That was because it got added to the S&P 500 index.
Which is interesting because a lot of people thought Robinhood might get that spot, right? Why Datadog instead?
Well, apparently the index committee just decided not to make changes at the usual rebalancing time, even though Robinhood was a popular prediction. It just goes to show how much impact these index inclusions can have. Passive funds tracking the S&P 500 now have to buy Datadog stock.
Right. And other market news, kind of a mixed bag. Del Monte Foods filing for bankruptcy.
Yeah, that's a significant development for them. And on the real estate side, condo prices dipped a bit in May, about 2%, especially noticeable in places like Florida and Texas.
And that historic Hollywood studio up for sale, $45 million.
A little slice of history there, yeah. Just shows the range of things happening across the market.
Okay, let's shift from the broad economy to policy and how it's hitting closer to home. There's this huge new bill, the One Big Beautiful Bill Act, passed the Senate, championed by President Trump, over $4 trillion in tax cuts.
That's the headline figure, yeah. Net tax cuts over $4 trillion.
So what's actually in it? What are these cuts?
Well, it introduces some new temporary deductions. These would run from 2025 to 2028. Things like deducting up to $10,000 a year for car loan interest, up to $25,000 for tips.
$25,000 for tips. It sounds like a lot.
It is. And up to $12,500 for overtime pay, or double that, $25,000 for married couples filing jointly. Plus, there's a $6,000 senior bonus deduction for folks 65 and over.
Okay. But who actually benefits most from these deductions?
That's the key question. Deductions, generally speaking, provide the biggest benefit to higher income households.
Hmm.
If you're a low earner, maybe you don't even owe federal income tax because of the standard deduction you already get. So adding more deductions doesn't really put money in your pocket.
Like tipped workers, right. You
Right.
mentioned something like 37% didn't owe federal income tax in 2022?
Exactly. So for them, that new tip deduction might not mean much. Financially, it's skewed towards those with higher tax burdens to begin with.
Okay. And here's where it gets, well, pretty concerning. The potential impact on Social Security and Medicare.
Right. This is a major point analysts are raising. They're warning these tax changes could actually accelerate the date when the trust funds run out of money.
Accelerate. How much faster?
The projection is it could push the Social Security Old Age Fund insolvency from early 2033 to late 2032, and the Medicare Hospital Insurance Fund from late 2033 to mid-2032.
So basically shaving about a year off the timeline before. What happens then? Automatic cuts.
That's the risk. If the funds are depleted, automatic benefit cuts could kick in. We're talking potentially around 24% for Social Security and 11% for Medicare.
Wow. And this is partly because the ratio of workers paying into retirees drawing benefits keeps dropping.
Precisely. It's a long-term demographic trend. Back in 1955, it was like 8.6 workers per retiree. By 2013, it was down to 2.8. The tax cuts just make that existing problem worse, faster.
It really sets up a potential future crisis point, doesn't it?
Yeah.
Are there other ideas being floated to deal with that ratio, or is this bill just making an inevitable crunch happen sooner?
That's the big debate. There are various proposals, but this bill seems to just accelerate the existing trajectory.
And the bill hits healthcare too, right? Medicaid policies.
Yes, sweeping changes there as well. One analyst suggested it could seriously shrink the customer base for providers like Centene, which could potentially mean millions losing insurance, and it could also restrict the fees that actually fund Medicaid programs.
So tax policy and healthcare policy,
Huh.
deeply intertwined with potentially massive consequences.
Absolutely. Shows how one piece of legislation can ripple outwards in complex ways.
Let's talk tariffs now. We mentioned them earlier. Trump's reciprocal tariffs, they were delayed a bit, but they're already affecting how people shop online, right?
Seems so. A report found about 34% of consumers are actually holding off on purchases, waiting to see how costs shake out.
And others bought early.
Yeah, 28% apparently rushed to buy things before tariffs hit. It's definitely changing behavior.
Are people trying to buy American more?
Some, but not a huge wave. Only about 20% said they're consciously trying to buy more made in USA. Interestingly, some people are actually increasing direct overseas purchases, maybe trying to get ahead of costs somehow, while others, about 22%, are cutting back. It's a mixed reaction.
And this hits specific industries hard. Fireworks, for instance. Sales were up this year.
Yeah, average sales reportedly near $400 for the 4th, up maybe 10–15% from last year. Part of that might just be the holiday falling on a Friday, plus maybe some early excitement for the 250th anniversary next year.
But the tariffs still hurt smaller sellers.
Definitely. Fewer of the small mom-and-pop fireworks stands open this year. The price increases on goods, mostly from China, made it harder for them.
Even beer sales are feeling it. Modelo and Corona.
Apparently so. Constellation brand saw a 2% dip. Part of the thinking is that Hispanic consumers might be pulling back on spending, possibly due to concerns about immigration policy, potential job impacts. It shows how these big policy debates can filter down to consumer spending in unexpected ways.
And speaking of trade, there was that new deal with Vietnam. Lower duties.
Right. The U.S. agreed to a 20% duty on Vietnamese imports, which is way down from the initially proposed 46%. And importantly, Vietnam agreed to put a 40% duty on goods that are just being transshipped through Vietnam from other countries, trying to dodge tariffs.
Closing a loophole. So could this be a model for future deals, this kind of specific duty structure and focus on transshipment?
It could be. It suggests maybe a more targeted approach than just broad tariffs and a direct way to tackle that transshipment issue. We'll have to see if this becomes the template for deals with other nations.
Okay, shifting gears slightly, but still at that intersection of policy and technology.
The Icy Spee Block app. What's the story there?
Yeah, this app lets users anonymously report sightings of icy agents within a 5-mile radius. Kind of like Waze, but for immigration enforcement activity.
And it shot up the App Store charts.
It did. Right after White House officials criticized it, raising concerns about agent safety, the developer says it's just about informing people, not hindering agents.
It really throws that tension between public information, privacy technology, and law enforcement into sharp relief, doesn't it? Where do you draw the line?
Exactly. It's a fascinating and very current example of that ongoing debate.
All right, let's dive into the world of tech and innovation. Starting with AI, it's just moving so fast. Baidu in China, huge overhaul.
Massive. They're biggest in a decade, apparently. They're integrating AI much more deeply into search. You can now use queries over 1,000 characters long, used to be just 28. You can use conversational prompts, feed it voice, pictures,
But
files.
it generates content directly, photos, text, video.
Yeah, it's a huge leap, clearly aimed at competing with newer AI rivals like DeepSeek and also those short video platforms that are eating into search usage, a real strategic pivot.
And new AI players are popping up constantly. 11 Labs, the voice generation startup.
Right, based in London. Only founded in 2022 and already talking global expansion, Paris, Singapore, Brazil, Mexico, and maybe an IPO within 5 years, shows the incredible speed and investment in that space.
But here's a fascinating twist. Even with all this powerful AI, using it for investing
Mm.
doesn't guarantee beating the market.
That's what the data seems to show. Many ETFs, many stock pros using AI tools, they're still not consistently outperforming their benchmarks.
Why is that? Is the AI not good enough yet, or is it something else?
It might be what they call the arithmetic of active management. Basically, if everyone starts using the same powerful tools like AI to try and beat the market, well, they can't all beat the average because collectively they are the average. So AI becomes table stakes, maybe. It doesn't necessarily give any single manager a persistent edge if everyone adopts it.
Interesting. So the fundamental math of the market still holds.
Seems like it. And meanwhile, there are these warnings that China is gaining ground very quickly in the global AI race. It's seen as the real competition.
And we shouldn't forget quantum computing is looming out there too, right? Another potential game changer alongside AI.
Absolutely. Huge future potential there, though still very early days.
Okay, what about shifts in big tech and digital services? Amazon's Freevee.
Yeah, they're shutting down the standalone Freevee app. That's going away in August 2025. The content, including the originals they made for Freevee, is going to be rolled into Prime Video.
Which already added ads earlier this year, right?
Exactly. So it looks like a move towards consolidating everything under the Prime Video umbrella, simplifying the experience, maybe pushing more people towards the ad-supported or ad-free Prime tiers.
Makes sense. And other streaming moves.
Yeah.
Netflix talking to Spotify.
Yeah, apparently talks about partnering on live events. Could be an interesting new direction for both companies, blurring the lines between streaming video, music, and live entertainment.
And Amazon's longer Prime Day this year. A sign of confidence.
Seems like it, yeah. Suggests they feel ready to handle a bigger surge in business.
On the hardware side, though, maybe some trouble for Intel with their advanced chips.
Reportedly, yeah. They might be considering not offering their next-gen 18A chip manufacturing process to external customers.
Why not? Didn't they invest billions to compete with TSMC and offer those services?
They did, but apparently they've struggled to actually sign up new customers for it. So they might just keep that cutting-edge tech for their own products if they can't get external buy-in, a potential setback for their foundry ambitions.
Okay, let's shift to the crypto frontier. Tokenization is getting hot again. Explain that for us.
Right. Tokenization is basically creating a digital representation, a token of a traditional asset on a blockchain. Think of like a token representing ownership of a stock or a piece of real estate or even a money market fund share.
And Ethereum is key here. ETH.
Yeah, the Ethereum network is important because it's smart contracts. Those little self-executing programs on the blockchain are what power things like stablecoins, Tether, USD Coin, and these new tokenized money market funds, like the one BlackRock launched, BUIDL.
And Robinhood's getting involved. Tokenized stocks in Europe.
They just launched that, yeah, offering tokenized versions of U.S. stocks and ETFs to their European customers.
But OpenAI wasn't happy about something Robinhood listed. OpenAI tokens.
Right. Robinhood listed something called OpenAI tokens, but OpenAI came out very quickly and forcefully said, hold on, these are not our equity. We didn't approve or endorse this.
Ooh, awkward. So what does that mean? How do you even value or understand ownership of a token if the company it supposedly represents says, nope, not us?
That is the million-dollar question, isn't it? It highlights a huge challenge in this space. Just because you can technically create a token linked to an asset or a company doesn't mean it has the legal standing or endorsement of that underlying entity. It raises really critical questions about ownership, value, regulation, and frankly, investor protection in this evolving world of tokenized assets. A big legal and conceptual hurdle to clear.
Definitely something to watch. Okay, wrapping up with a quick look at the auto industry. EVs, seeing some mixed results. Lucid,
Yeah, Lucid's deliveries were up 38% in Q2, which sounds good, but they still missed Wall Street estimates, suggests maybe softer demand for those high-end luxury EVs, possibly due to high interest rates.
and Tesla's deliveries dropped.
Down 13.5%. Analysts point to a few things, maybe some impact from Elon Musk's political stances, also maybe just an aging vehicle lineup needing a refresh.
And tariffs hitting EV makers, too.
Yeah, Lucid said they expect Trump's tariff policies could raise their costs by 8 to 15%.
It's not just EVs, though. Ford has a big recall.
Over 200,000 vehicles across 18 different models from 2018 to 2024. It's a software issue. With the rear view camera, it can go blank or freeze. So dealerships need to do a free software update.
And Stellantis, the parent company of brands like Ram, Dodge, Jeep, making some changes. New leadership bringing back SRT.
Yeah, new CEO Antonio Filosa promoted Tim Kuniskis to head up American brands and marketing, and they are reviving the SRT performance division.
And bringing back the Hemi V8. I thought they were phasing those out.
They were, but apparently they're planning to bring back V8 Hemis for Ram 1500 trucks in early 2026. A bit of a surprise return to traditional muscle, even amidst the EV push.
Wow. So the auto world is this mix of pushing forward with EVs, but also maybe looking back to some performance roots.
It really is. Reflects the complexities and maybe uncertainties in the market right now.
Okay, well, we have definitely covered a lot of ground today, from the hidden details in that jobs report to how tariffs might affect your fireworks budget, and into this really complex, fascinating world of AI and tokenized assets.
And hopefully you can see how interconnected it all is. That tax bill, the One Big Beautiful Bill Act, it's not just about your tax bracket, right? It could genuinely shift the timeline for huge programs like Medicare and Social Security.
Yeah, or how AI, this incredibly powerful tech that still can't reliably beat the stock market, is simultaneously changing how search engines work globally and creating brand new, sometimes controversial financial products like those OpenAI tokens.
Yeah.
So maybe something to think about as you go about your day. What underlying systems, what connections are you noticing changing around you, and what ripple effects might those changes have that we haven't even thought of yet?